In October 2023, I conducted an in-depth analysis report titled, "Is there investment value in Hong Kong stocks?" Now, let's take a moment to reflect on the state of the Hong Kong stock market back then. In my report, I highlighted several obvious investment opportunities for our investors. Personally, I committed to a strategy of dollar cost averaging, consistently investing in QDII ETFs focused on Chinese concept stocks and Hong Kong stock ETFs during the market's low points, just as you see. Fast forward a year and a half, if you were following my channel and held on to those Hong Kong stocks related assets, you would have seen nearly 50% return, my friends. Congratulations. Well, at the end of the day, investing is all about leveraging common sense and information gaps to capitalize on the ever-changing financial landscape. I firmly believe in playing the long-term games with the long-term people. Investing isn't a sprint, it's a marathon. The same goes for staying informed and tracking relevant information, my friend. If you are a multi-market investor looking at opportunities in the Asia-Pacific region while also dabbling in the US stocks, you are on the right track to developing a more global investment mindset. So keep an eye on my channel and let's navigate this investment journey together. Hi, my friend, I'm Sheila Wang. I'm here to update it on the most cutting-edge and fresh business and investment information for you. So don't forget to smash that like button and subscribe my channel. I also welcome you to join the discussion in the comment section below. Now, let's dive into today's key points. How much room for revaluation is left in Hong Kong stocks? What's the outlook for the market moving forward? And what other investment opportunities should we keep an eye on? Well, firstly, let's jump straight to the conclusion. From a tactic perspective, whether we compare to other assets and markets or look at historical trends, even within the Hong Kong stock market itself, current valuations remain on the lower end of the historical spectrum. This essence of the rebound in Hong Kong stocks is built on optimistic sentiment surrounding technology trends. The depth of this sentiment and how much imagination space is left will be key to answering questions about future market potential. The ongoing trends in AI, narrative shifts, and valuation re-evaluations are all moving in the right direction. But we need to be mindful of the short-term run. Positioning and cost are just as crucial. We've seen a lot of profit-taking, and even a slight shift in sentiment can lead to significant sell-offs. So, a pullback is a structural change in the market, and out of the question. In fact, we might see increased divergence. Now, some folks are worried, is this rally really over? Are we in for another long decline? I believe that any short-term pullback is simply a result of prices rising too quickly, my friend. The underlying logic that supports a mid-term bullish outlook still holds. Global recognition of China's tech capabilities is growing, right? And the global capital is beginning to reassess the value of our tech sector and the broader AI plus various industries landscape. So instead of viewing a pullback as an exit signal, consider it more as an opportunity to accumulate. Now the question is, what should you invest in? Let me break it down for you. Investing in Hong Kong stocks boils down to three main choices. That can be Hong Kong tech, high-dividend stocks, and innovative pharmaceutical. For specific selection strategies, check out my in-depth report, please, where I highlight stocks with potential growth of 20% to 30%. From a broad perspective, the tech sector like Alibaba and Tencent has substantial room for valuation recovery, coupled with strong growth potential attracting capital inflows. prices are currently fluctuating. If you miss the first buying opportunity, consider adding to your positions when prices reach support level during this pullback. Next up, let's look at high-dividend stocks. High-dividend assets like banks and telecommunications have become key for those long-term capital allocations. The average dividend yield for Hang Seng Index constituents is around 4%, with a historical average of about 4.5% within the Hong Kong Stock Connect. There are plenty of large companies boasting dividend yields over 5%. For instance, traditional sectors like finance, real estate, and utilities often provide high yields, with some major Chinese telecom and energy firms maintaining yields of 5 to 7%. Notably, indices like Hang Seng High-Dividend Yield Index show average yields reaching 7 to 8%. The CSI Index, which specifically screens for high-dividend stocks in Hong Kong Stock Connect, shows a current yield of about 6.6%, significantly above the market average. This indicates that the high-dividend stocks do exist within the Hong Kong Stock Connect, though they make up a small percentage, with overall average yields around 3 to 5%. This strategy is well suited for investors who prioritize stable cash returns, have a long investment horizon, and moderate risk tolerance, like those nearing retirement or already retired, looking to use dividends for ongoing support, or for those not chasing quick capital appreciation but preferring a buy and hold approach for passive income. It's also ideal for investors who can assess a company's fundamentals, including profit stability, cash flow, and a debt situation, to pick high-quality, high-dividend stocks with good dividend prospects for the next decade. These investors usually have a value investing mindset and are willing to put in the time to research and track these companies long-term. I will continue to keep you updated on these firms to make sure to follow along. Finally, let's not forget about the innovative pharmaceutical investment opportunities I mentioned earlier, which have potential growth of 20 to 30%. This topic is quite in-depth, so for specific insights, please refer to my detailed investment analysis report. Wishing everyone successful investing, and I will see you next time.